Well, thanks for having us. It's actually quite hard to follow such an inspirational speech, so thanks very much for telling us about that charity. I think it's a very important topic to talk about. So we'll try and follow it the best we can. I'll start by introducing myself. I'm Bruno Marade. I'm the Global Head of Responsible Investment for Aegon Asset Management. We are a 400 billion or so asset manager in the Netherlands. And we cater mostly to our institutional clients and mostly the Aegon Group companies, which you may be familiar with, Aegon Insurance in the Netherlands and Transamerica in the United States. About half of our assets are in some kind of responsible investment solution, whether that be exclusionary strategies, best in class, or impact strategies. Vincent?
Yeah, Bruno, I'm really happy that we decided on doing this very casually and having an informal session, because I understand that all that's between the audience and lunch is actually us. So, yeah, but before we go there, a quick introduction on my side. I work for ABN AMRO, one of the top 3 retail banks in the Netherlands. My role is I'm responsible for the ESG and sustainable investment activities of the bank. On the one hand, that's everything that's policy related and stewardship related, also our engagement activities. On the other hand, we're also involved in product development. Yeah, and maybe good to also look back a little bit, because I started this role in 2015, and what a different world do we live in today, because when I started in this role, we had about 4 billion in ESG client assets, and this joint venture together with Triodos. And today our clients have invested over 40 billion in ESG assets. So you can see that there has been enormous growth over the last few years. And maybe it's also good to share a little bit what our approach has been and how we actually ended up in this partnership together with Aegon. So maybe 3 things that were quite essential over the last few years to achieve this growth. One is that obviously we've put a lot of effort into selecting the right products and solutions, the right investment funds, as managed by many of the asset managers here in the room today. Secondly, we've also invested a lot in educating our staff, our front office investment staff. So that's the portfolio managers, but also more importantly, the client relationship managers, the investment advisors that speak to clients. Because what good are investment products if you can't explain them to your clients? And thirdly, we've invested a lot in our reporting capabilities, also on the impact, had a non-financial reporting side. And I think the combination of the 3 led not only to this growth, but also to the fact that currently we can offer ESG investing as the default option to new clients. And what we see is that our clients demand even more from us. So ESG, with ESG, you can basically continue your operations like you've done it before. But with impact investing, that's a different story. It's a different ball game. And more clients also ask us if we can offer more impact investment funds on the private market side, but also for public markets. And it was 2 years ago that we started looking into this. And back then there were not a lot of investment funds available on the impact side for public markets. At least we spoke to quite a lot of external managers. And yeah, we figured out that there was not one investment fund that was actually aligned with our beliefs and also with our clients' expectations. Because if we ask our clients, what is impact investing for you? Yeah, generally they always say, hey, it's alignment with the UN SDGs. Like we see them here in the background and on the pins. And this is also what our clients expect from us. So we started basically in this journey where we firstly looked at external funds, but then after a while we said, why don't we do this ourselves? So we have portfolio managers. The data is difficult, but perhaps we should engage with the companies that we would like to invest in. And then we ran into the problem that we don't have a very large engagement team within the bank. So we decided to set up an RFP and ask a couple of external asset managers that have some experience on the engagement side. But most of the asset managers were actually saying, yeah, we do engage with companies, but only on the risk side, only on the ESG side, and not so much on the SDGs, until we ran into Aegon, and Aegon was actually already engaging with companies on the credit side on SDGs, and that was very convincing for us to start looking into a partnership. And I think that was about a year and a half ago, right?
That's right, yeah. It's been a journey together.
Yeah.
Sure.
Yeah, and we decided to, let's say, evaluate our partnership right here on stage. So maybe that brings me to the question for Bruno. What is your experience so far working together on this topic?
I mean, for us, it's a real departure. So, historically, the responsible investment team in our shop has really worked internally only. We've been running sustainable strategies for a good 5 years and much longer on other types of responsible investment strategies as well. So we were used to doing the research, but when it came to impact, we really didn't have a strategy that was targeting impact in parallel with financial returns. So we were really targeting in our sustainable strategies, we were looking for alpha, essentially, on the basis of companies that were disrupting industries and looking to really create new sustainable business models. So this was a bit of a departure to us to actually look at the investment universe purely with an impact perspective. And we knew that it would be a challenge. The data, as you're all probably familiar with, is getting better and better each day, but scores don't correlate. You can't really rely on it completely. You might find a company being compared, a fast food company being compared to a gaming company, being compared to a fitness company. So you have to take a look yourself. You have to do your own homework when it comes to identifying companies that are really having a positive impact. So for us, the research itself was a departure for us, but it was also a departure for the responsible investment team working with a different asset manager rather than assets in-house for a change. So that was a big departure for us as well. We're not an engagement service provider ourselves. We've been running our engagement program as we see fit. We brought it in-house only 4 years ago, I would say. And because we felt that we could do a better job than what was being offered in the market. And, so it was quite reassuring to see ABN AMRO sort of recognize our efforts and come to us and seek to partner with us for these capabilities, these research and engagement capabilities. So it's been an exciting journey for us.
Yeah, I would say same here, because naturally, obviously, as an asset manager on your own, when you do everything yourself, you also have to, in many cases, reinvent the wheel. And that's also what I experienced in our partnership. In some cases, you have already been looking into data, into certain topics or thematics. On the other hand, sometimes that has been the case on our end. And yeah, I think for the last year and a half, we learned a lot from each other. Also comparing data and discussing, let's say, the more quantitative elements that we have in the process, and also really challenging them from a more qualitative point of view. I think as a challenge, it's also good to discuss data here a little bit, because we see so many data providers providing data on public companies. And then when we really dive into the details, as mentioned, from a more qualitative point of view, when we speak to the companies, sometimes we see a large deviation from what we actually see in the data sets. So my main takeaway from our partnership and from looking into these companies is, there's so much, the reality on the ground and what is actually happening within the companies, sometimes deviates a lot from what you read on the website and what you see in these data sets, right?
Yeah, and it brings us to this point about greenwashing, right? It happens a lot in the universe that we are looking at. Companies ultimately don't have an incentive to disclose something that makes them look bad. It's only natural that companies will disclose what makes them look best. And also, what's the cheapest data to collect? What can you put out to the market? What's not going to be legally challenged as well? Think about diversity metrics. We're dealing with board diversity metrics, gender diversity, as the only real metric that we have to compare companies on the very broad topic of diversity. That metric says nothing about the diversity in a company at all. So there's a lot of data challenges like this where standardization will come to play a role, and we definitely welcome the regulation that's coming in the EU around the taxonomy. Presently, we do think it's going to help solving the greenwashing problem, but presently, it's more cost than it is benefit. long term, it will indeed hopefully introduce us to this common way, this common vocabulary that we can have very in-depth conversations with our clients about their ESG objectives, about their impact objectives, and that is really fundamental to making sure that we don't greenwash. It's actually making sure we're clear about what our clients' expectations are and that they're clear about our processes, about how we're trying to address those objectives that they've set for us. But just getting to that common definition and that common terminology is a huge challenge for the industry today. It's something that keeps us up at night, for sure.
Yeah, it's good that you mentioned greenwashing, and we increasingly also get questions about the rainbow washing, the alignment with the SDGs. And many of our clients are also very critical, so they really ask us, what is the actual impact of this strategy? And it also took us a while before we actually collected a number of examples where we could actually demonstrate the impact to our clients. And in some cases, as mentioned, we see a website that is very promising of a certain company. We read the annual report, it all looks great. But then when we start engaging with the company, we actually find out that things are not that great in practice. And I think where the impact is that prior to our investment decision, we speak to this company, and if we're not convinced and if we're not sure, we also let the company know, and we also tell them that we won't invest. And we've seen that triggers actually a reaction on the investor relations side, on the side of the company. And in some cases, companies also come back to us on the questions that we've asked. So after a while, they say, well, we've actually looked into this topic or that topic. We've set KPIs, and we've started working on this. And I think, that is where the impact eventually is from our perspective. It's active engagement with the companies. And of course, we would also like to report on this more and more. We're now working on this for a year and a half. It usually takes time before the companies actually come up with KPIs and we can really build a case. But it's good that already within this time frame, we see the first results of our strategy.
For sure, and I think, to echo what Vincent is saying, I come from a development finance background, so when I was first told, well, what about an equities impact strategy? My first reaction was, what? Why would you have impact investing in listed equities?
Or is that even possible?
Is that even possible? Indeed. What we learned is that indeed there is enormous, let's not call it impact, let's call it value add in terms of doing that analysis and identifying the companies that are having the greatest impact that you seek to achieve towards the SDGs. There's definitely value add there, and if you can identify those companies and invest in them at scale, there could, of course, be an impact on their cost of capital. But the engagement program is where the real additionality comes in. It's really, aside from it being far more exciting, if you talk to my colleague Stephanie, who's standing in the audience, sitting in the audience there, she'll tell you before, she was sending letters to Vale in Brazil about, dams going wrong, and now you're talking to companies about a very positive part of their business and encouraging them to boost those positive activities. That's a very different conversation, and actually one that we find companies are more and more receptive to. That's part of the additionality of the engagement program. The other part is just getting companies to disclose the metrics to allow us to report back to our investors, this is the impact that your portfolio is having. That in itself should move the industry forward, hopefully allowing other investors to come and see those metrics themselves and actually invest more in those companies and really encourage the right businesses that are really trying to address the Sustainable Development Goals. So there is quite a bit of additionality there that we can be proud about, I think. But the proof is in the pudding. I mean, the engagement program is only just starting, so we can't overclaim what it's achieving. Engagement is at least a 3-year game, right, as we all know. So it'll take time before we see the real results on the paper. I think we might have time.
Yeah, I see time's up, and we're almost eating into your lunch time. But as a closing statement, maybe also a recommendation for everyone in the room. Don't try to invent everything yourself. See if there are partners, either here in the room or out there, that have already started the journey, see where you can partner. There's a lot happening in the Netherlands on SDGs, on SDIs. Obviously, we have the pension sector where a lot is happening. So I would really recommend to collaborate on this, because there are many challenges out there, and especially the data part and the reporting part, and actually showing the impact, the real world impact, and also measuring it. It is a true challenge, so let's try to collaborate as much as possible, I would say.
I agree, SDG 17, partnership for the goals. But aside from that, the two messages I would leave you with is don't follow an index if you're trying to achieve impact. The data is just not good enough for you to index today on the impact side of things. So definitely don't buy an index just yet. One day we'll get there, potentially, but not now. And secondly, don't think that engagement has to be just about addressing controversies, addressing negative issues. Companies are really receptive to a much more positive engagement around their positive impacts towards the Sustainable Development Goals. So I would encourage you guys to partner with us when we're doing these kinds of engagements. It'll only have more leverage and more power on the companies that we're trying to talk to. Thank you.
Thanks, everyone.